Welcome to the next episode of Just Peachy. I'm Peachie Thompson and I'm your host. Just Peachy is a show where we interview leaders and subject matter experts in the fields of insurance, finance, and taxes. We also have a lifestyle section where we talk about everything and anything under the sun. Today, I am so excited to talk about disability insurance. And we have a special guest, someone who's been in the financial services industry for over 28 years. He spent 15 years in the financial advisory world and the last 13 years in the disability insurance world. Please help me in welcoming Brokerage Director for Mutual of Omaha, Mr. Michael Prothe. Michael, thank you so much for joining us today and welcome.
Thank you very much for having me, Peachy. Happy to be here.
Yes, Michael, so you've been around for quite some time. Why don't you tell our viewers a little bit about yourself, how you got into the disability insurance world, and what you're doing now?
Well, it is not overwhelmingly excited, but I will be happy to share. So I did go into the financial services industry right out of college. My degrees were finance and management, but they weren't in personal finance. And today it's a lot of fun to see that undergraduate universities are now promoting and have degree programs that are personal financial planning for this
Mm-hmm.
type of industry. So that is great. Very excited about that to see that how that evolution has taken place. So I was active as a producer, had a practice, and continued to grow that. Always had partners in that practice. They continued to run the practice, and then made the decision that one of the passions that I have is more from an education and a training perspective, and that's where I made a transition from personal production into wholesaling and working with the carriers to promote and understand to the advisory community like yourself all the opportunities and options that are out there and available to them. So the impact of delivering that message to more producers, more financial advisors. My particular area happened to be in the protection planning area. So that was in whether it was long-term care, life insurance, disability, and I refer to them as the questions that or the products that not everybody is clamoring for because that means there had to have been a triggering event in order
Yes.
for something to happen. And so I was comfortable in asking those types of questions because not a lot of people want to talk about in the event of an unexpected passing, in the event of an accident or illness, in the event of a long-term care need. So I was comfortable in doing that, and that's where my skill set just migrated to was in the protection planning area. And with that, then I have now more or less honed that into disability income protection specifically. And again, the name of that, it doesn't garner a lot of attention for individuals to go, oh, I cannot wait to go have a disability in order to get a benefit. So myself, the
Right.
industry, we have really tried to change the conversation, influence the conversation to where this is more about paycheck protection and not disability because and so that is where I'm at now with Mutual of Omaha as a sales director for the disability income product. And we have, I joined Mutual of Omaha and it was in a time of which we were really known for being unique and experts in the blue gray, the skilled professional occupations. And I was fortunate enough to be able to create and incorporate a new product that allows for paycheck protection to really to protect all levels of all kinds of occupations, whether that is the electrician or the laborer, all the way up to the CEO, the attorney, the physician space. So that is really where we're at now today. So we really can be a carrier, and like I said, I'm very fortunate and very blessed to be working with Mutual of Omaha because we really do have a solution for individuals and that's the product that I work with is individual income protection. We're not on the group side, so it's always about the individual. So that's where I'm at. That's where I'm. Like I said, that's been my passion for a long time, and so yeah, so that's what brought me to the financial services industry.
Yes. very interesting background and how you got to it. Not a lot of people would jump from right out of college doing what you're doing. And that, I mean, back then, now, like you said, we have programs at schools, universities have a formal degree to get people excited about a career in financial planning or insurance planning or what have you. But back then, it wasn't really as glamorous per se. So kudos to you for sticking it for 28 years, right? So let's talk about the protection planning. First and foremost, I get asked this a lot, Michael. Why do people need to protect their income, and how do they do that?
So again, the question is easy, and I say it's an easy question, but the number of layers that are involved with that, and one of the questions that I always start with in any presentation that I do for producers or when talking to consumers, while basic, it's just this: is your income important to you? And of course, the overwhelming answer is always going to be yes. And then my follow up to that is, and what have you done to protect it in the event of an unexpected passing, death, in the event of a loss of income due to an accident or illness? And one of the things that we have experienced, especially in the midst of, I just refer to it as COVID chaos. We could talk
Mm-hmm.
about it from a market downturn perspective, or where those events that are taking place that individuals are now being exposed to, where their income was cut off by no fault of their own. In COVID chaos, the business shut down.
Mm-hmm.
They just had to close the doors. In a recession, you're laid off. Your income has stopped. That's the same type of an event that individuals are planning for, and that's what working with an advisor like yourself is helpful for, because as protection planning specialists, we are in the business of making sure that a income flow, cash flow, is always going to be created and available regardless of the events that may take place. And the way we do it from a disability, from a paycheck protection, is that if in the event of an accident or illness, because bad things happen to good people, they're not expected, that's where you have the ability to continue to create an income if you're not able to work due to that accident or illness. And that's why individuals really need to take a look at it and think about it in context of, if your income stopped today, what are you going to do to pay the bills? What are you going to do and to maintain your current lifestyle? Again, we're not talking about going out and you know,
Traveling the world.
yeah, we're not talking about the traveling or the second or third homes or anything like that.
Mm-hmm.
We're just talking about the day-to-day activities and the day-to-day obligations that we all have. And I think that it's, my wife works, I work, we have two kids in college. It's stressful enough when everything appears to be going well, where both incomes are coming in, both, we still have, there's an old country western song out there that there's too much month at the end of the money. And I think it's
Yeah.
a daily experience to think about, because those are a lot of the emotional things that
Yeah.
when an individual, whether it's the spouse or both spouses or one spouse or whoever it is that creator of an income, what would happen if it were to stop? And I think that's where, like I said, from a standpoint of, there's not a giant government program that's going to be created, where there were the PPP type of things, where they were paying to the small businesses because they were not able to open and to help pay their payroll. But there's not that program that's out there.
Right, right. So, really, what you described there, Michael, is disability insurance.
Hmm.
So, disability insurance, you were very specific: accident and or health issues,
Hmm.
right? So, can you just give us a little information about what types of disability insurance are out there
Sure.
right now?
Yep. So when it comes to the, is your income important to you? What have you done to protect it? Then the next step is you have to identify, well, what tools are out there? Because you can save cash, you can create a cash reserve, and you
Mm-hmm.
can say, I've got my savings, my non-qualified savings. You can talk about how you're saving towards retirement, and the types of disability insurance, the paycheck protection that are out there. It might be something that you could say, you know what, I'm going to, there's four questions that a person needs to ask for any kind of an income protection program. One is going to be, when does it start? That would be what we call our elimination period. So how many days do I have to wait until I get a first check?
Mm-hmm.
How long does it last? That's going to be the benefit period. So we can create a benefit period that could be 6 months, 1 year, 2 year, 5 year, 10 year, 65, age 67, age 70. So the plan design options that are out there. So when does it start? The elimination period. How long could you make it without a paycheck? How long does it last? That would be your benefit period. How much can you get? So when you talk about the monthly benefit, how much could you get? And that's where you have to take a look at and identify what is the other person working in the home. So if you have a two-income household, one is not going, one could have a triggering event,
Mm-hmm.
and what's going to be the difference that they need to make up? And as I stated earlier, that's one of those things where it's difficult enough when there's 100% of income coming in from
Yeah.
both people or one person. So in the disability income, we can't protect 100%, 100% of the income. We can protect a percentage of it, and so that's the next part. And then of course, how much does it cost? So when does it start? When does it stop? How much can I get? And how much will it cost? Those are the four questions from a plan design perspective. And that could be done in working with your financial advisor. That could be done just on a simple piece of paper. I mean, there's programs that are out there to say, what's your budget? But of course, nobody likes to talk about what's your budget. So just
Yeah.
add up. What's your inflow? What's your outflow? What's the difference if in the event one of those income sources were to go away? So that's the type of thought process and from a disability. Now, we can go into the details in terms of, there's all kinds of definitions, and there's total, complete and total, and there's future purchase options, COLA. And that's where a lot of times individuals will get just overwhelmed. And then I used the example of, you used to be able to get two types of Oreos. There was the regular Oreo and there was the double stuffed Oreo. But now you go into the grocery store and there's 100
Yes.
varieties and
Right.
flavors and taste and all that kind of stuff. And it's overwhelming. And that's the part of trying to just create a comfortable conversation with an individual to say, is your income important to you? Yes. What have you done to protect it? And then they can identify it. Because a lot of times we will hear a lot of individuals work with great employers who provide them with a disability program.
Mm-hmm.
And that's where advisors a lot of times will say, oh, you've got it through your group? Great, we're done. That's not the case. And there's always an opportunity. No one who has ever been in this business long enough who has been around a person who has received a claim benefit, who has delivered a death benefit from a life insurance policy. No beneficiary ever, no individual, no family has ever said, there's too much.
Too much. Yes.
I can't spend it all. And so from that standpoint, that's where it's very important, even when an individual thinks to themselves, oh, I have it through my employer. Great, congratulations. Can
Mm-hmm.
you answer those four questions about your program? The majority, they're not aware of it. They just know they have a great benefit. The most important benefit that they're looking for is their health insurance. So a
Right.
lot of times people, and this is a comparison that I always ask people to think about is, it's wonderful that you have an amazing health insurance plan. However, that's really only half of a comprehensive insurance plan, because the health insurance plan is going to make sure to pay the providers and the practitioners if you need care. So you're going to pay the hospital, you're going to pay the clinic, you're going to pay the doctors for all those things that you have. Who is going to pay you? So you're paying everybody else through health insurance, but who
Mm-hmm.
is going to pay you as an individual? And that's income protection. That's paycheck protection. That's the disability program. And a lot of things can take place from that. And the reason I say that there's always going to be a conversation about those four questions, because if your employer is providing you that protection, that coverage, that means it's no cost to you. And that means that the employer is actually taking a deduction. So if you were to receive a benefit, it's going to be a taxable benefit to you.
Right.
So if you're going to get, you could tell maybe your group plan is 60% and it's up to $5,000. Great. Are you going to get 5,000? No. You're going to get $3,750 because you're going to have to pay state income taxes and you're going to have to pay federal income taxes. So you went from earning 100% of your income to 60% of your income, but really you're only going to get about 45% of your income. So those are the simple, little calculations that I encourage individuals to do and to have in an open and honest manner.
You point out a lot of great things, Michael. So let me ask you. I picked up on something that you said. Why can't we insure 100% of someone's income?
Yep, great question. So it's not a conspiracy theory or anything like that, but the insurance carriers really what they had is they realized they needed to have a motivation to go back to work. That's the part of it. So a replacement of income program, it's just an industry standard, is usually somewhere between 60 and 70% of a person's income. And that 70% is because it's on a tax-free basis. Some people would then say, okay, well, that's pretty close. That's like 80 to 90% of your income on a gross basis. So that 60-70%, that's why it's more of a motivation to go back to work. That's why you're not going to get 100% of your income, because if that was the case, then there are individuals who would then, of course, take advantage of the system and never go back to work. And
Right.
so the idea is and that's why most individuals that you're working with, they are motivated individuals. They're working hard to begin with. They want to provide 100% of their income back to and provide for their family. So that's that 60 to 70%, and it's a a reason to go back to work. I mean, it's the same reason that you're not going to ever get 100% of your income from maybe the Social Security disability program. There's always going to be a smaller amount based off of the contributions that you have.
Got it. Got it. That makes sense. So, Michael, one of the things that you pointed out is having the DI come from an employer benefit plan. And what you said, not a lot of people think about that. The fact that it is a benefit paid for by the employer. When they get the actual disability benefit, it is taxable to the employee. And that's a very important distinction when it comes to having or comparing a personal disability insurance where you're buying yourself, because when you buy it yourself, it's not your employer who's paying for the premium. You are paying for the premium. Therefore, and correct me if I'm wrong, when you get the benefit, Michael, that is not tax. Is that correct?
That is correct. Yep, that is correct. And not only is it from a taxation perspective an important part of the conversation, but it's also important to remember that an individual plan of which you have purchased is portable. So it's always going to be with you. The group plan that you have through your employer, and again, this is something we saw through, again, whether or not it's an economic perspective, a recession perspective, or I was making reference to a COVID chaos perspective, is that when you're no longer employed by that individual, by that company, you do not have that benefit any longer. And you may go to another company, or you might start your own gig, you might start your own business, whatever that might be. You still have that personal disability income policy that will go with you. And there are opportunities to build in provisions that can help you protect more of your income in the event that you were to lose your group coverage or change your employers. And then that's what I was referring to is there are some features that you can build into any contract, not just a Mutual of Omaha contract, but a carrier contract that you can have. And again, that's one of the important reasons about having that conversation with your advisor, with your protection planning specialist, is to make sure that the plan design is is meeting your needs for all those different contingencies that could take place.
Very well said. So how does someone qualify for disability insurance?
So it's important to know that there are three areas that a person is going to take into consideration with any carrier going through the application process. One is going to be your occupation. What is it that you do on a daily basis? What are the daily duties of your occupation? And not all occupations are going to qualify for consideration. Some of them are just too dangerous. If a person is a roofer, as an example, a person who is a longshoreman, if they're maybe they're working on the coast, professional logging operations. So there are some occupations that they're not going to be able to qualify. There are other methods of which they're going to be able to protect their income. So your occupation. Then it's going to be financial. How much do you earn? What are your earnings? Are you a self-employed individual? Are you a W-2 individual? And then, of course, medical history. So it's going to be your occupation, it's going to be your earnings, and it's going to be your medical history. So one of the things that you have to remember is that the life insurance underwriting process is different than the disability underwriting process. So it's what the industry will call morbidity versus mortality. So some of the things that you are, because the number one reason for claims in the disability is musculoskeletal, your back, a knee, a hip, or anything like that. And quickly, and these are not issues that are caused as a result of accident, because you asked me about the accident and illness, accident and sickness, whatever it is that you're going to call that. So these are things that are, the accident is not necessarily a triggering event, although that's the one we think about a lot. I was at a car accident. I fell off a ladder, right? Whatever those things. Really, it's going to be in that sickness area. I mean, the highest percentage of claims is going to come from sickness. Musculoskeletal is up there. Cardiovascular issues, cancer, unfortunately, is moving up, and it also is starting to see a lot more from a mental nervous perspective. We're starting to see claims on the uptick from that perspective as well. So then, during that application and that underwriting process, this is where the carrier we will just take a look at what is in your medical history. I can use me as an example. I have a steel plate in my left arm from an accident that took place. I have a hip that had some work on it, and as an example, though, my arm, because it happened over 10 years ago, there was not an exclusion or a rider on it. So when you're going through the medical underwriting process, there could be a rating, there could be an exclusion, or there could be a decline. Now, I made reference to my left arm. That is not something that there is not an exclusion for. But my hip, I had a hip resurfacing. It's not a hip replacement, but there is an exclusion on my policy for any type of debilitation from my hip issue. So if I was to try and make a claim on my hip, that would not be a valid claim. However, if I were to have a cardiovascular issue or something like that, that's going to be covered. That's going to be a normal triggering event. So from an underwriting process, that's why it's important that we have all that medical history up front, that we know exactly what we're getting into, so that because we're going to do an MIB and a farm check and a normal application. And then that's going to be true for any carrier that you're talking with. And again, that's one of the other reasons why a group plan is there's not that application type of a process. But it is important then to have that supplemental plan from an individual perspective, because our health is going to be the best it is at the day it is. Because as we age,
Right.
we grow older, and things start to happen. And so I think it's very important just to know that pre-screen, that medical underwriting, it's not the same as a life insurance policy because of those different types of triggering events. So it's just important for individuals to know, boy, could I get a DI policy based off of this with my medical history? Sure. I would say the majority of those applications that we get, we're in a method of being able to prove them.
And I do have a session on underwriting life insurance versus disability insurance. So, but those are some excellent points you just pointed out, Michael. One of the things that I get asked is this: if I'm not underwriting or getting underwritten per se when it comes to my group disability insurance, does that mean that I'm actually paying higher premiums because personal private disability insurance that I buy myself, I'm going through the whole underwriting process? In your opinion, is there a price difference?
Sorry about that. I'm not sure
That's
exactly. I
okay.
thought my door was shut. This is my
That's
dog.
okay. He just wants to say hello.
Yes, that's my puppy, Augustus. By puppy, he is 9 months and 90 pounds, so he's a very
He's
big puppy.
beautiful.
Thank you very much. He is a rescue puppy, so I apologize for that. I thought my door
That's
was shut
okay. He
there.
can
So,
stay. He'll just keep giving you kisses until
oh
we're done.
goodness.
Yes.
But to answer your question, then, and the group LTD plan will always be less expensive than an individual plan, and that will be true for any kind of a protection planning product, whether it's a health insurance plan, whether it's a life insurance plan. So it is true on a disability income protection product. Now, the part of that is a good distinction is that when you buy a individual plan, it is based off of your age at the time of application. Now, each year, if you were to wait, your premium is going to be more expensive. Now, with a group plan, they're going to be age banded. So there are rate increases that are always going to be involved. So the rate for a 30 to 35-year-old is going to be less expensive than the rate for a 50 to 55-year-old. But those aren't
Mm-hmm.
cost of which, of course, the consumer, your clients, that they're going to get on that they're going to be aware of. But they are built into it.
Right.
So as we age, we grow older. And that same is going to be true on the life insurance premiums as well. So that is a very important distinction to make. Is not only is your health the best it's going to be today, but your premium will be more expensive as you continue to age. So if you
Right.
lock that rate in, it's not going to increase, and that's going to be true of any individual DI policy of which you are purchasing. That rate will remain the same throughout the
Mm-hmm.
life of the contract. If you add additional benefit to it, then any additional benefit, monthly benefit, will have a slight increase in premium based off of your age, but that base amount will always stay the same.
Right. And again, going back to what we talked about earlier, that premium savings is actually for your employer, not
Yep.
not to you, because
Yep.
your employer is paying for it, and the actual benefit that comes to you as a consumer is actually taxed. So again, when you're paying for it yourself, you are not taxed on the benefit that you receive for that reason. So, all right, Michael, when do I start thinking about long-term care and stop thinking about disability insurance?
Yep. Great question. So the way I will distinguish between the two is as long as you are actively earning an income, disability income protection is going to be the most important part of your income protection plan, outside of your life insurance that you're having.
Mm-hmm.
When you start thinking about your long-term care planning, our sales team will often refer to it as when you're going from a transition of disability income, that policy is going to stay in force as long as you are actively earning an income. Long-term care planning is going to begin when you start thinking about, well, what's it going to look like from an asset preservation perspective? And again, you think about it from a standpoint, some people will say when I turn 40, when I turn 45. But from a long-term care perspective, that's going to be important too, because it's going to be an underwritten type of a policy. So
Mm-hmm.
when you're underwriting, you want to take into consideration, the idea of, am I healthy enough to get that long-term care? So I really can't put a date on it. It's more of a lifestyle. How about that
Mm-hmm.
as an opportunity to transition? Because as long as you're actively earning that income, it's important to have disability income protection. The long-term care, that's going to be a budget conversation.
Right.
And that
That's
budget
exactly it.
conversation is going to be about, well, am I able to transfer that risk of protecting my assets to a long-term care insurance policy? And because I made reference to budget, I do just want to make a note that individuals oftentimes will ask me, well, Michael, who's your competitor? Who's your competition in the world of disability income protection? And I am very open and honest by the fact of saying that there's a lot of great carriers that are out there. They're not any of my competition. My competition is cash flow. My competition is
Right.
how much money can be allocated to protect your most valuable asset. Because your most valuable asset is going to be your ability to create an income. And that is a part of the conversation that we always want to have and again, carrier reps like myself, we are very comfortable. We know one another. We present with one another, and it's important for us just to get more people thinking about it and to have those types of conversations about protecting your income. And that's why it's more of a conversation around how much are you willing to commit to protect your income if in the event of an accident or illness. And a lot of times individuals will begin to think about it, and I say this as an example of my own. It's almost embarrassing how much I pay for mobile phone service
Oh
or
yeah.
my internet or the TV and the subscriptions that we all have. I often think, what if we called it not a premium, but a subscription service to protect your income? Because it's the same as a gym membership, right? You pay 50,
Right.
60, 70, $80. Well, guess what? There's a plan design out there from an income protection perspective that could do that. And we're I joke that we're not using our gym membership anyway. Some people are, so why not reallocate that budgeted dollars? And so that's again where we really want to have that conversation about, you're going to be able to find a great plan design and a carrier. It's just how much are you willing? What percentage of your income? And that's where, from a carrier perspective, oftentimes we'll say, to protect your income, it's it's going to be between 1 to 3% of your income. Are you willing to do that?
In the big scheme of things, 1 to 3% to protect your income, it really is nothing if you look at it.
Hmm.
But you're absolutely right when you said that the competition is cash flow,
Hmm.
and people, it's all about perspective. I have seen they have fancy cars and they pay a ton of money,
Hmm.
monthly car payment, versus protecting their income, and they make those decisions where they choose having a fancy car over the protection of their paycheck,
Hmm.
which is
Yes.
unfortunate. But that is the reality, and educating consumers like what we're doing today, hopefully people will realize that it's not about the price, but really it's a decision. And at the end of the day, you should look at how much you're paying for your cell phone, because I'm thinking how much I'm paying for my cell phone right now. That is a that is a very good point, because it's very expensive. It's very expensive. So, Michael, that said, I have one more question. So if someone was listening, they're thinking, well, how do I know which insurance company
Hmm.
do I go with? Do you have any tips on what to look out for?
Yep. I do. And each and I will make this statement in terms of, a lot of times individuals will say, well, what's my likelihood of being able to get a claim paid? And
Mm-hmm.
or from a carrier strength perspective, the carriers that are in this business are in the business to pay claims on valid triggering events. There's always going to be individuals that are going to be out there that are going to try to game the system. But if a person is taking their financial planning and they're working with an advisor like yourself, and that advisor is going to be able to look at the different carriers that are out there, that the different options that are going to be available. And it's important to note that some carriers, and I say this from a standpoint of, no investment fund family is going to be able to meet all the different types of asset classes. Not everybody's going to be
Correct.
perfect for all of them. And insurance carriers are going to be the same thing. So you want to be able to take a look at option A, option B, option C. So when you're trying to evaluate who is going to be the right option, that's where I think an advisor like yourself helps take all that question out of the way, because you're going to say, look, I have access to all the carriers that are out there, and I'm going to go out similar to what you see from a home auto type of a thing. You want to do a comparison. You want to know what's out there. Once you've narrowed it down to, say, one or two, like I said, the definitions and the plan design options, that's what's going to allow you to have a consideration from what's the premium going to be. And then at that point in time, you can make that decision. Mutual of Omaha has been in the business of disability income for over 100 years. Other carriers that are out there, and again, they're all very strong carriers. They've all got great ratings, all of those kinds of things that are important, because you want to make sure that the carrier that you select is going to be around and be able to pay any claims that might happen as a result of a triggering event. So I think the most important part of that initial conversation is more about connecting with a financial advisor, because once you go and ask the Google search engine, I mean, just like anything, it's going to take you down a rabbit hole. You're going to go, oh my gosh, there's just too many choices. There's just not enough information. I'm overwhelmed, so I'm just not going to do anything because I have it through my employer. That's why I think the importance of working with a financial advisor, and that's why I think it's very important for them to enable you, empower you to just reach out to a financial advisor, to an insurance individual, a protection planning specialist, and I'll give that a pitch to you, Peachie, in terms of being able to then go ahead and reach out to get information from others when it's helpful, because again, there are so many different types of protection planning products, financial planning ideas and concepts that are out there. It requires some research and level of expertise to be able to identify which is going to be the best fit.
Right. Well, thank you for that, and thank you for really honing in on what's required. And a lot of times, not a lot of people can appreciate, especially in the world of Google. Everybody can Google everything, and they really. I have had clients come to me knowing they know everything by the time they come to me. And I'm looking at them thinking, wait a minute, where did you get this information from? So it helps to have an intelligent conversation. It helps to have a grounded conversation and really customizing what is best for the client versus, hey, you know what? I Googled this and, my friend has this or whatever. What people need to, I think, understand is that what's best for someone may not be the right thing for you.
Correct.
And that's really where having access to all the carriers and figuring out which is the best one for a particular situation is really what's in the client's best interest. So, Michael, this is awesome. I love it. Thank you for sharing your knowledge with us. I really appreciate it. It's my honor and pleasure to have you on the show, and I look forward to the next time we connect and the next time we talk about some more disability insurance stuff. Thank you, Michael.
Thanks so much.
I appreciate
it. You bet.
Have a great
wonderful day.
Information shared during the show are opinions of the speakers. They are not legal, financial, or tax advice specific to you. Consult your own specialist, attorney, accountant, financial planner, or insurance advisor for your specific situation.